The following program is furnished by K1 International, LLC, and is responsible for its content. Now, from the 5th floor Cumulus Studios in downtown Dallas, it's time for Inside Real Estate. Here's your host, Michael Kruizinga.
Good morning, Dallas-Fort Worth Metroplex. Welcome to your Sunday morning, and we hope you make this a part of your every Sunday morning. A little inside real estate, sports, entertainment, politics for you. We talk it all. Call-in number if you want to talk to us about anything. If you're thinking about buying or selling or investing in real estate, or if you just want to talk about what's going on in business, what's going on in the world today, that's fine too. 888-787-KLIF, 888-787-KLIF. Website, InsideRealEstateRadio.com. A lot of great stuff on the website. You can, of course, catch up with all of our business partners there and all of our social media, catch past episodes, and catch past interviews on there as well. So all that's right there at the website. We've got some job opportunities.
What kind of jobs?
Sales. This is going to be for the magazine sales, and it's actually a great opportunity. You get to work from home, telecommute, if you will.
But you got to talk to other people, though.
And yes, the downside is you have to talk to other people, and you can't let the computers do all the work for you. So you got to go talk to some folks, and but it's real simple deal. And honestly, once you kind of get up and running, you really only have to work really hard 2 to 3 weeks out of a quarter, if you can believe it. The people that really get it and can do it right, you work really hard for 2 to 3 weeks, and that's really all you have to do for a quarter.
I was going to say, I wouldn't lead off with saying you only have to work hard 2 or 3 weeks to anybody.
Well, it's the truth. I mean, if you know how to do it, then that is what it is, and the phones should be lighting up right now, with people wanting to know about this job opportunity. But go to the website and then connect with us, InsideRealEstateRadio.com. Hey, we've got a great show today, but hey, I want to talk about next week's show real quick. Next week, we've got a couple great authors on the show. One is a local author, Deborah Crombie, and we're going to be talking to her about her latest book, Garden of Lamentations. So she's going to be on the show. That's going to be an exciting fiction book to talk about. I've got a lot of reading to do this week, actually. We need to get that book. And also, John Guandolo is going to be on the show as well. He runs UnderstandingTheThreat.com. He is an author of the recent book, Raising a Jihadi Generation. Now, that came out in 2013. He's written a couple of books, and he writes articles regularly. This guy, I can't wait to talk to him. He's a really impressive guy. Former FBI, former Marine, went through the U.S. Army Rangers School, diver, parachutist. This guy's kind of done it all. But so we're going to talk to him about terrorism and what's going on with ISIS and all the things going on in the world today related to terrorism. So that's going to be a great conversation next week.
Mm-hmm. Keeping it light, huh?
Absolutely. Right. Absolutely. Light and easy. Yeah. And then we're going to talk Bugs Bunny and cartoons afterwards. So perfect Sunday morning, just like we were kids. I want to talk about this for a minute, because this came up for me this week, going back to real estate for a second. And this is really good for real estate agents. A lot of times we have referral partners that we work with, and they will take a referral fee, at the end of the deal if the transaction gets done. And so this is great, for real estate agents. And, this is part of the industry. We pay referral fees, to these companies. And, or you can pay up front for advertising, that sort of thing. But with these types of partners, you pay referral fees on a solid, good lead that pans out and you can close. And but there's some bad referral partners out there, too, that are just not very good at all. And I had tested out one of these referral partners a couple of years ago. And I don't mind saying who it is. It was Mavoto.com. And, they started sending me leads, and they were just a bunch of bogus leads, really. A lot of bogus leads, just running down nothing. As far as I could tell, they were really just leads out of the phone book. You know, like, what? Huh? What? I'm not doing anything in real estate, you know. Inquiry just came in from Movoto.com. They're like, what? What? What is this? Anyway, I had a call from Movoto this week, and they said, hey, you owe us a referral fee on this house you closed. You know, it's like a year and a half ago, something like that. And I was like, really? What? You know, what's the address? You know, and they told me, and I was like, no, actually, that was one of my clients, and I've got long history with that. I helped their mother sell her house, helped the mother buy a house, and then I was helping the daughter sell and buy. Long history of this client going back, several years.
Mm-hmm.
I was like, so no, this is not one of your referrals. They're like, no, it's, the husband's name is Jose, Smith, we'll just say.
Okay.
And I was like, okay, well, send me the notes on this, I was like, oh no, the notes clearly say this guy right here, he's looking for a house, down in Hutchins, for $80,000, and I said, the notes clearly say we never got in touch with this guy.
Wow.
And so he's trying to say, because the name was the same.
Right.
Of the husband, of the wife who I helped, who was the daughter for that family. I was like, they're just trying to chase down referral fees out of nothingness. And so, if you're a real estate agent out there and, maybe if you've had some great experiences with Movoto.com, and if you have, that's great. But I just wanted to let you know, if you're thinking about starting up working with them as a referral partner, do not, because this type of thing is going on. They're not running their leads very well, and they're just going through transactions from years gone by trying to find referral fees. And I was like, this is just bad business practice, bottom line.
Wow. There's a lot of companies out there selling those leads that seems to be all they're doing is collecting your fee for the lead, that they're very bad leads.
Yeah, absolutely. And I mean, this, I've got plenty of referral partners. I'm happy to pay the referral fees that we've agreed upon for good leads that come through.
Right.
Absolutely. But for a company that, you quit working with a long time ago because they provide you crap leads, and for them to come chasing something that they have no backup data on at all, just a matching name, and this name is, it's John Smith, it's a gazillion John Smiths.
Wow.
The notes don't back up, the search location doesn't back up. So, and for the consumer out there, I mean, if you're a consumer and you come across on your Google search when you're looking for real estate and Movoto.com comes up on that first page sometimes, sometimes it's the second page, you need to think about what websites you're doing your real estate searches on, because they're not all the same. Some of them are just garbage. And, I'll be honest, I'm going to throw this one into the category of a garbage website. I really will, both for the consumer and for the real estate agent.
Well, go ahead.
And they do show up on that very first page in the search engines.
Yeah.
I've seen them before.
They do. Look, at the end of the day, you have to remember, folks, that these websites that are out there, they're not selling real estate. They are websites that are really at the core of it stealing MLS information from the local, MLS boards in every city USA to compile a website full of listings. They sell advertising. They do not sell real estate. So, I highly recommend go to a real estate agent that you trust, go to a brand that you trust, and just do some research on finding a realtor that, is going to work for you, that's experienced, etc. Don't trust information on websites that are passing through real estate information. You're going to have a frustrating experience as a consumer when you do that, at bottom line, because you're never going to get good, solid information.
And not just that, they're also going to resell that information or your information to multiple people, and you don't know how long they're going to keep that information into their system and keep reselling it.
Right.
And we've talked about that before too, Mike, on the show, where you have to actually talk to someone. Mm-hmm. You can't buy a house over the internet.
Right.
And all of these websites that you're going to come across when you're looking at homes, it's completely outdated information anyway.
Right.
So you really do need to contact a real estate agent if and when you're ready to purchase.
Yeah, you do. And, look, some of these websites, they have really nice, pretty pictures,
right,
and really pretty websites and whatnot. and that's great, and they got some neat functionality sometimes, and that's fun and that's great. For some preliminary research, great. Play with the websites, but when you're ready to actually do something, be adult enough to have a conversation and try to find an agent. If you can't get one that's recommended through your family, or friends or church or whatnot, then do a little research, find some folks on the line that have some good reviews, and try to test out a few and see what works for you. Right. Hey, one thing I want to mention real quick is a couple of our partners of the radio show that haven't been able to been in to the studio lately. There's something that ties them together, even though they're in two totally different industries, and it's something that I really appreciate, and that is the fact that they really like to protect the elderly and how they operate. Unfortunately, the elderly are targeted for products and services because they have some discretionary income, and they can be talked into, unfortunately, different products and services. But these two partners I love because they actually care about the elderly and helping the elderly. One, of course, is Brian and Karen Holloway over at LoneStarTransfer.com. If you have a timeshare that you're trying to get out of, which many do, LoneStarTransfer.com can take care of you there, and they're not going to sell you a bag of goods. They're actually going to help you and help you get out of those. Elderly are often many of the ones who need help getting out of timeshares, and they absolutely help those folks, absolutely. And then, of course, for those folks that have lost mobility and, they need help in Randy's world, which is the Hydrojet Walk-In Tub world, his website, hydrojetwalkintub.com. They take care of those folks at a I just love their product because it's made in the USA, no commission sales staff, plus, lowest step in the business, $10,000 or less. You can get a Hydrojet walk-in tub when the industry competition is at $20,000 or better. And so I love the fact that those two companies that work with our show, they protect the elderly, they help the elderly in their industries, versus the other way around. So we really appreciate that, those two guys. Hey, folks, we're going to take a short break, then we're going to come on back.
We sometimes live in a world of misinformation that's just not backed up by anything factual. For example, when the new media people like Pandora, Spotify, and SiriusXM tell your marketing people that they're growing and radio is way below them in reach. Factual? More like flat-out lie. Edison Research, the independent research company that does those exit polls for CNN, looked at people's consumption of audio in a single day. The truth? More than 93% of people listen to radio in a week, and more than half of all audio consumed in a day is radio. Want more facts? Only 6% listen to satellite in a day, 6% to Pandora, just 3% to Spotify. Radio is still the dominant adult mass marketing medium, and the 7 Cumulus radio station share in DFW reaches over 3 million people per week. 3 million. Those new media wannabes don't have that kind of reach. Find out more about the Edison Research and the truth about audio consumption at DallasRadioWins.com. That's DallasRadioWins.com.
The Richard Tonihka Insurance Agency in Arlington has nearly unlimited resources when it comes to getting you the best insurance rates and policies for home, auto, and more. As part of the Goosehead Insurance brand, you, the consumer, have the power of choice through the Richard Tonihka Insurance Agency Network. Richard can quote over 20 A-rated companies to find the best fit for you, the best policy at the best price. Call Richard today at 817-286-2002. It's the Richard Tonihka Goosehead Insurance Agency, 817-286-2002.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey folks, we are back. Inside Real Estate Radio, website InsideRealEstateRadio.com. Time to do a little bit of mortgage talk. We've got resident mortgage expert Terri Waggoner over at TerriWaggoner.com as a website, TerriWaggoner.com.
That's right.
Yes.
Good morning.
Good morning to you.
How are you?
I'm excellent.
Good.
What's up?
We have been doing a lot of loans that are rehab loans. And so I thought we'd just spend a minute talking about that this morning because, there still is a shortage of homes out there, I think. The good, clean, ready to move in homes. And there seems to be still homes on the market that maybe they're not the prettiest. the sellers don't want to put the time and the money into fixing the house up, so they're selling it as is. And those are the homes that we can do rehab loans on.
Right.
And at Supreme Lending, we do FHA rehab loans as well as conventional rehab loans. And I kind of just wanted to touch on some of the basis for what you're going to be looking at when you're doing a rehab loan. If you're doing an FHA loan, and we'll kind of focus on that today, because you can actually go down to a 620 credit score and still be able to do a rehab loan.
Okay.
You can, as long as you have $5,000 worth of repairs, a minimum of $5,000 worth of repairs, you can switch it over to a rehab loan and accomplish the work that you want done to the house in the cost of the home, in your mortgage. You can finance everything in. You can go up to $35,000 and no structural foundation work to be done on what we call the Streamline rehab loan. A lot of companies, a lot of lenders don't do the full 203K, which is what we do at Supreme Lending. And what that does is that includes the structural foundation. So, gosh, we've said it before, in Texas, if the home that you're buying hasn't had foundation work, it will at some point need foundation work.
Sure.
That just seems to be the common trend
Right.
In our area. Our grounds shift, and we need foundation work.
Right.
So the FHA full rehab loan allows us to roll the costs of those foundations into your sales price. And again, they're two separate loans, but as long as you are over $35,000 or you need foundation work, we'll do the full. And I just kind of want to say something real quick. I have done probably about 4 loans in the last couple of months that folks started out at different lenders to do the full rehab loan, and they stayed at the other lender for 2, 3, one of them was 4 weeks that they stayed at this other lender, only for the lender to come back and say, oh, we don't do that kind of loan. So pay attention to when you're talking with your loan officer to make sure that they at least sound like they know what they're talking about.
Right.
Because this is not either you do it or you don't do it. Okay? Supreme Lending does the rehab loans. So give us a call if that's something that you're looking into.
Well, these loan officers, they should know that up front.
They should know that. It shouldn't take them a month to figure out that they don't do that loan type.
Yeah, and if it's taken a month to get an answer, it's because they didn't know, and it comes back in underwriting. They're like,
Right.
By the way, we don't do that.
Right.
And then here's the deal that you have to save. 3 or
Right.
4 weeks later, they come and find you, and then you can save it.
Right. Well, and then the seller is angry because they thought they were going to close, and now you're starting over with a different lender.
Yeah.
And they don't like that. And so, we have to kind of patch some feelings sometimes along the way and move forward. And typically we can close a rehab loan in 45 days or less. This one that we just saved, we closed it in less than 30 days. Now, that's kind of unheard of. Everyone was in a big hurry. Our buyers were awesome. Got us everything that we needed 10 seconds after we asked for it. So that makes a huge difference in processing the loan, obviously, is all willing parties. But that turned out well for the buyer. They got to buy their house and roll all the closing, or not the closing, but roll all of the rehab costs into the loan. Yeah.
But it's important to mention this because there are, like you say, so many houses that are a little bit of ugly ducklings out there. And, sometimes you end up being... You need to look at those, because it is a tight market. The ones that are good, hot, ready to go, they're going to be in multiple offers.
Right.
But those houses you're kind of talking about, oftentimes people think, oh, well, those are just for cash buyers, or hard money lender buyers. And that's really not the case, with your programs, especially when you guys cover foundation.
Right.
Because some of these ugly ducklings need some foundation work. When you can cover that, this opens it up to the traditional buyer that may live there or just the small-time investor, et cetera, versus going hard money lending or versus just only a cash buyer.
Right. Well, and there's lots of other things that we can add into the loan itself. On the FHA loan, if there's a pool, we can fix the pool. You can add a pool. On the conventional loan, if you buy a house and you have to have a pool and you find this house that doesn't have one, we can add the pool and roll it into the loan itself. Yeah. So what happens is you get a contractor's bid sheet, go to the house with your contractor, walk through the house and list out everything you want done. The contractor's then going to give us that list. We're going to send it to the appraiser when he appraises the house. The house appraisal report will come back to us with the value after repairs. So we close on the loan. Oh, and another point I want to bring up too is your contractor has to be approved while you're being approved. We take no chances that anything negative is going to happen and money's going to disappear. So we truly vet that contractor just like we're vetting the purchaser.
Right.
So they have to be approved as well.
Right.
So once the loan closes, the contractor begins the work, and then depending on what size of rehab we're doing, there'll be draws to the contractor. So he's not just going to get all of his money and then start working. Right. He'll do some work, he'll get a draw. He'll do some more work, he'll get another draw. So the number of draws will depend on what size of rehab that we're doing.
Right. And of course you guys have an approved list of contractors, and they may already be on that list, but if not, then they have to go through the vetting process.
That's correct.
Yeah.
That's
so
correct.
when you're doing this, is this in addition or on top of your loan? Is this like a second loan, or
No.
is this rolled into the loan?
It is actually rolled into the loan.
Okay.
It is not a second lien or anything like that. It is rolled. The cost of the repairs are rolled into your loan amount.
Okay.
Okay. So, I mean, it's a great program that allows you to get the house that you want. And like we've talked about so many times before, where you don't have to be competing with 15 other people that have made offers on this same house.
Right.
Go find you a house that maybe is that ugly duckling, but it's in a great neighborhood. It's in the school district that you want to be in. It's just the carpet's ugly and the walls need painting, you know? So let's fix the house the way you want it to be, and leave the drama of having to bid with all 15 other people on one house to someone else.
Yeah, it opens up, a whole world of possibilities to pick up a house that's, got great bones, looks great on the outside, and then it's that house you walk in, you're like, oh man, it's disappointing. But hey, all these things are easy to fix,
Right.
for the most part, mostly cosmetic, floors, countertops, maybe a little bit of remodeling, paint, etc. But yeah, I mean, if it's up to 35, that goes a long way.
It's 35 on the streamline, but if we do the full, it's not capped at 35. You can go beyond that. And on the conventional rehab loan, you can kind of the sky's the limit on that deal. If whatever you're adding to the home will stay affixed to the home, you can roll it into the cost. So if you want to put an outdoor kitchen, you can. If you want to put a pool, you can. A storage build, whatever you want to do, we can add it, especially on the conventional loan. There are less restrictions on that loan than on the FHA loan.
Yeah, it's really all about you being able to be approved as the buyer,
right.
For this type of loan. And then number two, knowing that working with your realtor and assessing what's going to need to go into it and what that after, rehab value is going to be. If that matches up, it matches up with what the appraiser sees, after the contractor bids and everything come in, then boom, hey, you're good, rock and roll.
And if the house is not livable while the repair work is done, you can even roll in your payments, in up to 6 months worth of payments into your loan amount, so that you can stay where you're staying now,
right?
And roll those payments into the loan amount, and then begin paying once you move in.
Once you're in, yeah, That's pretty awesome. That's good stuff.
Yeah, it's a great loan, and like I said, we've done a lot here lately, and we've talked about how awesome my processing team is, and they're fabulous, and now they're fabulous at this loan type as well.
Sweet.
Yes.
Well, we're gonna have to get some of those loans in the door.
There you go. I'm ready.
Let's make it happen.
That's right. Rehab specialist.
That's right. Hey, folks, for that type of loan or any other type of loan or refinance, Texas Cash Out or otherwise, get with Terri Waggoner. Her website, terriwaggoner.com. Terriwaggoner.com.
There you go.
And we will get you taken care of. We're going to take a short break, folks. See you in a few.
If you ever want to buy a car or a house, you're going to want to know your credit score. Banks will check it. If there's a mistake on your credit report, you could pay more in interest rates and fees than you have to. Where can you go online to quickly get your credit score and credit report for free? CreditKarma.com. And check it whenever you like. It's free and there's no catch. At Credit Karma, we thought you should be able to see what the banks see before you apply. So don't get an unwanted surprise about your credit score. Go to CreditKarma.com. That's CreditKarma.com.
Folks, it's Mike Kruizinga here with Inside Real Estate Sports Entertainment on 570 AM KLIF. Did you know that virtually all of us will experience a fall in the bathtub at some point in our life? Well, statistically, it's true. And as we get older, a fall in the bathtub can spell disaster, as we just can't recover the same as we did in our younger years. Don't let something as silly and preventable as a bathtub fall put an end to all your special plans you have lined up for your golden years. Invest in a Hydrojet walk-in bathtub. Made in the USA and with the lowest step in the industry, Hydrojet walk-in tubs has your best interest at heart. With no commission sales staff or huge warehouse overhead, they build and sell direct to you, saving you thousands of dollars over their competitors. Call Randy, my friend and owner of Hydrojet Walk-In Tubs at 855-980-8827 or go to hydrojetwalkintubs.com. You'll be able to speak with Randy directly, and make sure to mention you heard about it on the radio. And for you veterans out there, there's a grant available for you to cover the majority of the cost of a walk-in tub, making it darn near free. Call Randy at 855-980-8827 or go to hydrojetwalkintubs.com today.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Website, InsideRealEstateRadio.com. Website's InsideRealEstateRadio.com. Hey, if you want to talk to us, 888-787-KLIF, 888-787-KLIF. If you have any questions or just want to shoot the breeze, give us a shout. Hey, we're going to talk with good old Mr. Perry Cockerell, our resident legal expert here, about some very interesting cases and that are going on out there in the world today. And, of course, he's the author of A Private War. And, of course, you can check that out on Amazon, or you can go to his website, perryjcockerell.com, and to get more information as well. How's it going, Perry?
Hey, fine. Thank you, Mike. Nice to talk to you again.
Good to see you in studio again.
It's been a while.
It has been, yes.
Let me mention the book is now out in 4 parts. It's illustrated. You can buy it on Amazon. If you don't want to read a 500-page novel, you can read a 100-page novel. Let me mention, I want to give a shout out to Terri. She does a great job over at Supreme Lending, and that's a great product she just mentioned.
Yeah, it really is.
They're closing a loan for me on some property we're buying in Fort Worth, and they're doing a great job on that. So
Thank you, Perry.
I highly recommend Supreme Lending.
Thank you, Perry. I appreciate that.
I really do. Well,
absolutely.
And the topic today is on some conflicts in the law, in some case law, involving trespass to realty. Usually it's when there's some boundary issues. It's adjoining property. Somebody puts something on the other neighbor or the neighbor's property, and it remains there for a period of time. The question then is, what happens? Who owns that? And disputes happen. And this is very important to make sure you get a survey, find out what's your property line, and if your fence is not on your property line, you better move it back.
Right.
Because you're eventually going to lose that property. First case came out 3 days ago, January 26th, and it was from Houston. And here there was a shed, driveway, a fence. It was built in 1941. The neighbors had a dispute, so they filed suit to declare their boundaries. And, of course, they lost. 1941, that's a long time. And so Here's what the law is. There's a 3-year statute of limitation if you take title under a deed or what they call color of title, and you possess that property can become yours. And they call that adverse possession. The second one is is a 5-year statute, and if you own it or if you cultivate it, pay taxes on it, and you claim it through a deed, and then there's a dispute, you could acquire title to that too. You just file suit, action to acquire title, you can own it, even though your deed might not necessarily describe that property. And that's how. Now the third one is 10 years. You don't have to have anything. You just take it, acquire it. You cultivate it, you use it, and you enjoy it. You don't even pay taxes on it. You can go to court. You can get title to that property. and those are called the adverse possession statutes. Makes sense? Supreme Court has held you can do that. Now, here is what's happening. 2 new real cases. I'm not going to mention them by name because they're both still in litigation. I'm only going to mention them because to tell you as property owners, it is never a good idea to let your boundary line be questioned or be in question. Mm-hmm. First case was a lease set out in 1994. The tenant had it surveyed in 2001 and did nothing with that survey. In 2006, the tenant moved the fence line over to incorporate some additional land. The owner did not know about that. And then the next year, the owner signed a new lease on the property, which made no reference to that survey. It made reference to the original description in the lease, which was a box, and they didn't do a survey then. And so it's not until 2013 when the owner begins to want to sell the exterior part of the land that he realizes there's something not right here. So he orders a survey and figures out they moved the fence line over. And not only did they move the fence line over, they moved it over before he signed the lease in a year prior to that in 2007. So they basically gave an amendment that made no change. And now the question is, why didn't he figure that out? Well, it could be a number of reasons, but now here's what happened. The trial court said that this suit is barred under the 2-year statute of limitation. 2-year. There's another statute, 1603, that prevents trespass, other types of causes of action like car wrecks, trespass, personal injury, things of that nature. 2 years statute of limitation. And the court says, well, you can't bring that trespass suit because it's barred by this 2-year statute. Okay, now what happened to the 3, the 5, and the 10? Mm-hmm. Who gets the property? And the property owner wants to have the boundary line declared under a separate statute that allows you to do that. That statute has no specific statute of limitation. If there's no specific statute of limitations, it's usually 4 years. There's no answer to this yet. I mean, there is actually. The court said that this suit could not be brought because it was not brought in 2008, 2 years after the initial injury. So the court says that the statute of limitations runs when the trespass occurs, even if you don't know about it.
Yeah, that would be frustrating as a landlord because, many landlords, are not in the same city, same state as the property that they own and may not visit it very often at all.
That's exactly how these are happening. They're commercial settings.
Yeah.
They don't realize that you're coming to sell the property and you getting a survey. That's when this dispute happened. That's what happened in this one. So nevertheless, though, the possession of that area had only been going on for 7 years. So the trespasser who alleged adverse possession under the 10-year didn't prove that he had it for 10 years, but how could he win the suit? He won the suit because this other statute is kicking in and playing. So what this implicitly is saying is that there's a 2-year trespass statute of limitation that is overriding the adverse possession statutes. That's a conflict. Okay.
Yeah, absolutely.
Now, another case that came out December the 1st figured this out, and this is case 2. Same thing. They built a wall on a piece of property. The owner had access over the adjoining lots. That wall effectively denied access. The wall was built in 2009. Suit was filed in 2013. What does the trial court say? Barred by 2-year statute of limitation. Court of Appeals figures this out and says, oh, wait a minute. Hold on here. This is not right. The 2-year statute of limitation is intended to limit the amount of money that you recover. Damages. Does that make sense? The legislature is intending to cut off the damages for the possession of that property. Mm-hmm. It wasn't intending to say you can't remove them.
Right.
So they reverse that case and send it back and say, no, the action to remove you is governed under the 10-year statute of limitation. That's That makes sense, doesn't
That'd be
that
correct.
makes sense.
Yeah.
Yes.
Doesn't that make sense to anyone here?
Yeah, that'd be correct. Yeah, the way
Well,
I
that-
would understand it. Yeah.
Of course.
Yeah, I'm not a lawyer, but that makes sense to me
Right.
too.
Doesn't
Yeah,
it?
you can't just have my property
because
because I didn't notice it.
because I didn't sue you, even
Right.
though you didn't possess it for the number. That is what's happening now. There are calls out to legislators who have been sent these two cases and saying, do something. The last day to file a bill is like March 10. Clarify this statute. Now, there is a case pending in the Texas Supreme Court. They initially denied hearing it, but there's a motion for rehearing. I don't want to get into the specifics, but here's what the concept is coming down to. There's the 14th Amendment due process. You can't deprive somebody of their property without due process. So there's no hearing. There's a statute in Texas that allows you to have your boundaries lines declared, but you apparently can't do that under this too. And so effectively what the attacks are not just that case and other cases, including this one in Corpus Christi. They're attacking it under the 14th Amendment due process clause, or the due process clause in the Texas Constitution. The other attack that can be made, if there's other litigants out there like that might want to look into it, is there's the equal protection clause under the 14th Amendment of the Constitution that says if you're similarly situated, you need to be treated similarly. Usually,
Right.
Now here the property owner and the trespasser are similarly situated on the same property. They have the same interest, but the trespasser can not prevent the owner from kicking him off by alleging the 2-year statute of limitation, when the statute gives him 3, 5, and 10 to acquire the property.
Right.
So the owner has a 2-year, the naked trespasser has 3, 5, 10. He's being treated differently.
That's crazy.
Doesn't that make sense?
Yeah, to me, I don't think that, to me, the 2-year, statute of limitations should not apply when it comes to property rights. That, to me, it doesn't, the 2-year statute of limitations, for if you get into a car accident and you decide to sue somebody for, some, damages, when
Right. That makes sense.
that makes sense. 2 years, makes sense. But when it comes to property rights, it should go to what has already been established, 3, 5, 10.
It should. Now, this is not a new concept. If you go back many years ago, even some of these papers written 10 years ago, there's articles that say the 2-year statute of limitation is the trespasser's best friend. And this has just been under the radar all these years. Nobody's been able it's not an issue that makes people jump out. If you call someone, they don't necessarily want to go to Austin over this. I mean, it's not that kind of issue that
Right.
brings out the crowds. They're not going to be
Yeah.
protesting.
Yeah, they're not protesting
They're
that.
not going to be.
Yeah, it's not
They
going to be a
might
bunch
be
of
after
signs.
this radio show, Perry.
They won't
We
be.
may have given another reason for them to protest.
This is
That's right.
This is a simple cure, and there's no reason to go into the constitutional, the federal constitution issues, really, because it's just an interpretation issue.
Yeah.
It's kind of under the radar.
But it seemed, to me, if this is coming to court, it seems to me like this is just obvious. Why is this? Why are they allowing this 2-year to kick in, and why aren't? To me, it seems obvious from a judgment point of view how this should be ruled. I mean, why do you?
There's plenty of other. The courts just didn't come up with it. There's plenty of precedent for what they're doing, and but when it comes up to when it comes up to the issue of adverse possession and this statute, that's where it's starting to. The big picture starts kicking in. You really see usually where the 2-year kicks in. Here's why it's an issue: let's suppose you pour chemical on somebody's land, and this happens. It's like oil and gas usually. The question then becomes, if it's a permanent injury to the land, then you get the fair market value, the loss of that. And this permanent, now if it's what they call a continuing trespass, something that's ongoing, then you can continue to bring that suit because it's not a permanent. And this permanent temporary distinction is what's leading to the confusion between in the damages. So the 2-year was designed to limit somebody for suing them when the damage to the real estate itself was permanent. I don't believe that 2-year was intended to prevent you from removing the trespasser from the land. It's
exactly.
If you damage somebody's land, like chemical exposure, or do something that damages it,
Right.
causes the fair market value. That 2-year was designed to limit the damage, kind of like a car wreck. If you don't bring suit in
Right.
2 years, that's where I think the legislature had in mind. You never know. We'll just see how it plays out.
Right. This is very, very, very interesting. So, folks, hey, for the property owners out there, whether you own, a small subdivision lot, small home in a typical subdivision, to a state lot or to a ranch with heavy-duty acreage, or you run a hunting lease, whatever the case may be. The point is you need to visit your property. You need to make sure there's no encroachments on your property by other landowners nearby you. You need to make sure your property lines are on the fence lines, and that, sometimes over time those things can be moved by neighboring landowners. You want to make sure that your fence lines are on the property lines, and just make sure you're looking out after your property, and especially if you're an investor, and you have rental properties, et cetera, you need to look in on those. Don't just take a property manager's word for it, because at the end of the day, you own it. You're liable. Make sure you go in and inspect your properties from time to time. That's an important part of this. And so, hey, great stuff, Perry. Hey, Perry's website, perryjcockerell.com, perryjcockerell.com. Folks, we're going to take a short break, and then we'll be right back. Folks, it's Mike the Realtor here from Inside Real Estate, and if you're not listing your property with me, bottom line is you're leaving money on the table. There are over 15,000 agents here in the DFW area, most of whom are part-time and do a few deals a year. Do you want to trust them to sell your home? I think not. Call Mike the Realtor, the radio realty expert from Inside Real Estate on 570 AM KLIF. Promise you will get to me direct. Go to InsideRealEstateRadio.com. Don't sell your home with just anyone. Go to InsideRealEstateRadio.com and connect with Mike the Realtor.
Living in the DFW area, expansive clay soil and extreme weather conditions play havoc on homes' foundation. But thankfully, you can turn to PermaPure Foundation Repair of Texas, who has successfully repaired over 20,000 properties and counting in the DFW area. With the most trusted, tried and true foundation repair methods, trust the professional staff of PermaPure Foundation Repair to take care of your property, and most repairs are backed by a lifetime transferable warranty. Mention Inside Real Estate Radio when calling PermaPure at 214-637-1444 or when booking online at permapure.com for your Inside Real Estate Radio discount.
Far from the shores of home, 2 African-American U.S. Army privates fight for their lives on the battlefronts of World War II. The first Black War correspondents fight to cover the perspective of the black soldier. The novel A Private War weaves all this and more into an epic World War II era story of friendship, conflict, religion, and redemption. Get a copy of Private War, a novel by Perry Cockerell today, now available on Amazon.com. And tune in regularly to Inside Real Estate Sundays, 8 to 9 a.m. to hear Perry Cockerell, attorney at law, as he provides expert analysis of the latest and greatest in legal news.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. Website's InsideRealEstateRadio.com. There's some good legal stuff from our legal expert extraordinaire, Perry Cockerell, and, of course, his website, perryjcockerell.com. So that was good stuff. Thank you, Perry. But now it's time to get into some insurance talk, and our insurance expert, Richard Tonihka, is here. RichardTAgency.com is his website, RichardTAgency.com. By the way, folks, Richard can shop over 25 companies behind the scenes to get you the best policy and the best rates. This is something that your Allstate, your State Farm, your Farmers cannot do. By the way, he could put your homeowners with one company, your automotive with another company, still give you bundle discounts. Nobody has the ability to do that. That's why it's just a no-brainer to call Richard and talk to him about insurance. But
And it's always fun explaining that to people. And it's like, it's not the same company. I know, but it's still going to be bundled because everything's with my agency. And, well, but it's different companies. I'm your agent.
only we can do that. It's important to note that only Richard, only Goosehead can do that. It's something that it's a very unique model, and it's why it's a no-brainer.
Absolutely. And today, good morning.
Good morning.
We're going to talk about investors, the people that have rental homes, and because the kind of rental home that, or the kind of insurance that you have for your rental home or your investment property is going to be different than your homeowner's policy, in the fact that there are so many different with homeowners policies, there's a bunch of different types of policies as well. But for some reason, when you're looking at an investment property and you're looking at your insurance, you really are, most people just really shop on price. And I've run into this more recently where people are, well, you're more expensive. I was like, well, the policy that I'm offering you is actually one that will cover you. And if something happens, you don't have to worry about something because the policy you have is good for that piece of paper and the ink that's on it. But other than that, there's not a lot that you're covered for.
Yeah, I mean, for a quick example, they might be getting, people get quoted on price, like you say. They might be getting quoted on a limited peril policy, and of course it's no brainer, all peril.
Yes. And the woman that, one of the women that I was talking to this last week, we were looking at her rental properties. Very smart about her business and everything and just in general. But when it came to insurance, she strictly went by price. And we're looking at the policies and I'm just like, one of the big things is the investment properties. You've got Texas dwelling policy 1 plus or 3. And so a Texas dwelling policy, I'm just going to say an investor policy. 1 is actual cash value. And anytime you see actual cash value on anything insurance related, it's not a good thing. That means depreciated value comes in.
That's right.
And a TD, and I'm going to talk about just one of my carriers and what they say is covered. And this is fairly general because every carrier is going to be different in how, whether something is going to be actual cash value or depreciated value or replacement cost. But with this one carrier, a TDP1 or an investor property 1 covers fire, wind, hurricane, hail, explosion, vehicles, or riot. That's it. They don't cover sudden and accidental water. They don't cover foundation. It's not replacement costs. They don't cover vandalism or malicious mischief. They don't cover falling trees or limb or weight of snow or ice. You are covered for those 6 things, and that's it. And even then, if one of those 6 things happens, it's a depreciated value. Mm-hmm. And so let's say your house or your roof is 15 years old. To replace your roof, the adjuster comes out and says, your roof is going to cost $10,000. You've got a $100,000 house. Yes, very small. But just to make my math simple. So your roof is 15 years old. You've got a $10,000 claim. They're automatically going to cut half of it right off. So now you're down to $5,000 for the claim amount that you're going to get or that they're going to pay on. Then you take out your deductible. $1,000 because it's a $100,000 house, and let's just say that you had a good agent, or the agent just stuck you at 1%. Mm-hmm. So now that $10,000 claim, you're going to pay $6,000. The insurance company is going to pay $4,000. Where if it was replacement costs, you would pay $1,000. The insurance company would pay $9,000. So you're in fact losing $5,000 out of pocket because you saved $400 or $500 on your insurance policy. Mm-hmm. And that's, unfortunately, that's the policies that this particular person has. And you're just looking at one hailstorm comes through, and if it hits 4, 5, 6 of our houses, that $5,000 multiplied by 6 houses turns into $30,000 loss out of pocket. Nobody is going to, that's when you really start seeing the benefit of going with a replacement cost over an actual cash value policy. And it's also when you start looking at, when you're investing in these properties, you're really investing in that money or the income coming in from the renters. So if something happens to where there's a fire, there's a hailstorm, or a tornado comes through, and your homeowner isn't living in your house, you're still going to get your fair market or fair rental value, mm-hmm. even though they're not living there because of whatever risk that was covered, until you're able to re-rent that, whether it be to them or to someone else. But while they're out, you're still going to get a certain percentage of the money, or you're still going to get your rent up until that coverage limit is reached.
Right. Yeah, absolutely. And let's continue on the other side of the break. Let's hold for a second, and we'll go to break, and then we'll come back and finish that up. Hold on. With over 3.5 million square feet and 5 DFW locations, Ideal Floors has you covered for all your flooring needs. Whether you're looking for carpet, tile, laminate, wood, or vinyl plank, Ideal Floors has you covered. And with their price match guarantee and their 100% satisfaction guarantee, they are the absolute best in DFW for all your flooring needs. Call Kevin Hamus, the owner of Ideal Floors, at 214-789-0422 or go to idealfloors.com for all your flooring needs. When it comes to your mortgage and refinance needs, trust Terry Waggoner, our resident mortgage expert on Inside Real Estate Radio. With a wide range of financing options and competitive interest rates, you can trust Terry for a fast and reliable loan process with superior service. Go to terrywaggoner.com or 469-644-4818 today. Supreme Lending is an equal housing lender. NMLS ID number 207-089, 6730 Horizon Road, Suite B, Heath, Texas, 75032. SML Mortgage Banker Registration, Residential Mortgage Loan Originator.
If you have a timeshare, this time of year you're probably thinking about those maintenance fees coming due. Hi, I'm Karen Holloway, owner of Lone Star Transfer, located right here in the DFW area. Before you pay your maintenance fees, call us for a free consultation, 972-722-3166. We'll get you out of your timeshare and put a stop to those maintenance fees, guaranteed. 972-722-3166 or LoneStarTransfer.com.
Now back to Inside Real Estate. Here's Mike the Realtor.
Hey, folks, we are back. All right, let's resume our insurance conversation here. We're talking about depreciation and that, look, when you really need to think about that because, that actual cash value versus replacement is a big deal.
As an investor, you're looking at your ROI. And anytime you have a claim, that is going to affect your ROI on that house. Mm-hmm. And so knowing what you're covered for and you want to minimize your loss, and the best way to do that is pay a little bit more for a replacement cost. So let's say you had a investor policy or DP1 with replacement costs added. It still doesn't increase the number of risks that you're covered for. All it does is for those 6 or 7 things that we talked about, all it does is say that if you have replacement costs for that. It doesn't include water. It doesn't add any additional perils.
Right.
But let's say that you did want to add the additional perils. You can do that. And if you want to add the additional perils and sorry, my headphones are going out. You want to add the additional perils and get replacement costs on your policy. You're looking at a investor policy or a DP1 plus or a DP3. Those are the two. And the big difference in those is with this particular carrier, both cover sudden and accidental water. The DP3 or the investor policy 3 covers foundation caused by water. And that's really the big difference in those two, but they give you the additional perils. They give you the replacement cost for everything, or not everything, but as much as this particular policy does. And so what they're looking for is what kind of policy do you have? What are your risks? Because just because my risk is different from yours, a DP1 with replacement costs may be all you're interested in. And if that's your risk, that's fine, as long as you know going in. It's just one of the things that I try to do for people is to make them educated on this is exactly what you have. And if you're comfortable with that, that's fine. I'm going to make you sign all the documents and notices that says, I explain that these are the limitations of your policy. But if that's not what you think you have, and it's not what you want, then these are your options. And it's not just with one carrier. It's with a myriad of different carriers where we're going to look at, and although these are just general statements, I mean, a DP3 with some carriers may be different from a DP3 with other carriers, where they may limit or change your roof from replacement cost to actual cash value. And just knowing that going in is one of the things about educating people to make sure that you know exactly what you're paying for.
Yeah, absolutely. Yeah, I mean, when people are getting quotes from insurance companies, basically, I mean, people need to understand how the industry really works. Is, if they're getting a quote on homeowners or automotive, they're simply just going through the policy based on all of your information, and then they're just cutting everything out to get you the lowest price. So they're selling you the most base model possible. So think of it as a vehicle. They're selling you basically the wheels and the chassis and the engine and not much more.
Exactly.
I mean, it's really almost without doors, and it's without, windows and et cetera, because it's not protecting you. It's a vehicle. It'll go up and down the road, sure, but it's not going to protect you.
And like I said, if that's your risk, that's fine. But knowing the person, and this is the reason that you have to have the conversations with people, is to find out what your risk is. Because I have some people that's all they want is the absolute bare minimum. This is what we want. We don't care if we have a total loss, kind of thing. But if that's not you, if that's not your risk, and you're going in and you're saying, okay, for this particular home, my ROI is at this. And so you're looking at, for this particular policy, I need it to be at this price, and these are your options. And we can do that. Just give us a call and let us know, and we'll take care of it. But
absolutely. And the website is richardtagency.com. richardtagency.com. Richard will get you squared away for all of your insurance needs over at Goosehead. Hey, he's the best. Folks, we will see you next week, 8 to 9. We're here every Sunday. We're out of here. Neither the hosts nor the guests or contributors of the show Inside Real Estate with Mike Kruizinga are attorneys, CPAs, tax advisors, or investment advisors, and are not providing legal advice during the course of the show. If you need professional legal advice or services in any of those categories, please seek the appropriate professional. The host is a licensed real estate agent in Texas with the Chris Arnold Premier Realty Brokerage, a fair housing broker and member of the MLS. Texas real estate agents are prohibited from providing legal advice.
KLIF Dallas, KSCS FM HD2 Fort Worth,
KLIF.com.
a Cumulus station.